Don't quit your job without watching this video first. I'm going to share 5 tips on how you can prepare for the transition so it can be nice and smooth. I'm Adriel and I quit my 9-to-5 engineering job back in 2021. Here are the 5 things that I did that really helped the transition. The first thing you need to do is to pick a date. Pick an exact hard date on when you're actually going to quit your job. This is important because you need to have the time to plan for everything else around this date. You want to have a plan to ensure it's a smooth transition. Don't just go on a whim and quit your job and put in a 2-week notice. What I recommend is at least 3 to 6 months, depending on your situation. For me, I knew I was gonna quit in June of 2021 because I knew I had to quit under less than half the year, because for me, I wanted to qualify for real estate professional status. That is something that will greatly affect my taxes and helps me reduce a lot of my tax load. But you can only qualify for that if real estate is your main activity, your main job for more than half the year. So I knew if I quit my W-2 job in June, which is under the 6 months, then I had a great case of saying why that year I qualified for real estate professional status. Now, you may not have something as drastic as that, but regardless, the next tips I talk about all revolve around the timeline of when you're actually gonna quit your job. The second thing I did was I maxed out my 401k. If you have an employer that does 401k matching, you want to take advantage of that the year that you're going to quit. So since I knew that I was going to quit in the beginning of June, I doubled my contributions from January to May to my 401k to max out that year's annual limit in with just 5 months. That way I could get the full employer 401k match before I quit my job, even though I didn't work the full year. And the reason I did this is because I knew once I quit my job and left my employer's 401k plan, I could roll over my 401k into a self-directed IRA or a solo 401k, and that opens up a whole lot more options for me to invest my money besides the stocks that was in my employer's plan. This opens up crypto, real estate, and more alternative investing assets. Since I was already doing real estate, I knew exactly what I wanted to do with my 401k so I can keep growing my money tax-free. That made it very easy for me to switch and to roll over to a solo 401k once I quit my job. It also lowered my taxable income for that year, as the majority of my paychecks for the first 5 months went to my 401k. So my W-2, when I got it for taxes for the next year, it would show that I didn't make as much taxable income. So if your employer offers a 401k match, make sure to take advantage and maximize it before you quit your job. And once you do, start researching the benefits of a self-directed IRA versus a solo 401k, and make sure you choose the one that's right for you. Next, get any debt that you will need before quitting your job. What I mean by this is if you're trying to buy a house and qualify for a mortgage, or if you're trying to refinance your house or get a loan for a car loan, do all this before you quit your job. The reason for this is because lenders love to see a stable W-2 income on your tax return. This will greatly affect if you can qualify for mortgages and debt. I knew I was planning on quitting in June of 2021, so in February of that year, I refinanced my personal home, and also for my businesses, I got as many unsecured lines of credit that I could from local credit unions in March and April before I quit my job, because I could show I still had W-2 income. I ended up being able to get qualified for $150,000 in lines of credit for my business. About 8 months after I quit my job, I tried to refinance one of my small apartment complexes with the same lender that I already had a mortgage with. However, they completely denied my refinance request, even though the property was cash flowing and I've never missed a mortgage payment in 4 years. To them, if I didn't have a W-2 income, I could not get a loan with that credit union. No matter how stupid that sounds or how much more money I was making doing real estate, they wouldn't count it. So I ended up going to a competitor and refinancing with them. They were a different credit union in the same area that understood real estate and cash flowing rental properties, and they were able to do the refinance. So that first credit union that I originally had the mortgage with lost my business and lost a customer. But it just goes to show that a lot of lenders are very picky if you don't have a W-2 job to show as income. So it's gonna be a lot harder to get those kind of loans if you quit your job. The fourth thing you wanna look at is health insurance. If you have a full-time job, you probably have your health insurance through your employer. Once you quit your job, that all changes, and it's important to have a plan. There's something called COBRA, which allows you to continue to have the same health insurance coverage that you had with your employer. However, the downside is they were gonna require you to pay the full amount of the premium yourself. Normally, an employer subsidizes a good portion of the health insurance. Once you have COBRA though, you have to pay the full amount. When I quit my job, Cobra was an option, but it didn't make sense for me because my monthly payments would be more than double to keep the same health insurance. So what I did instead is I went to the healthcare marketplace and I enrolled in a new plan. The healthcare marketplace is the official healthcare insurance marketplace by the US government, and they do an open enrollment once a year in like November. However, if you lose a job or quit your job, that counts as a special event that qualifies you for enrollment, so you can enroll on any of the plans on that website. So I went on the healthcare marketplace and I found a plan that was more affordable and signed up for that instead. One thing that did catch me by surprise though is here in Texas, you can only have a PPO plan through an employer plan. As an individual, I cannot get my PPO plan. I have to sign up for an HMO plan, which I do not like because I really prefer PPO plans. If you don't know the difference between an HMO plan and a PPO plan, basically it means in a PPO plan, you can choose whichever healthcare provider you want to go to, and that's fine. But with HMO, you have to go to the ones in their specific network for that plan. Basically, it's less freedom of choices. And when you want to go see a certain provider or a certain specialist, you have to go to your primary care physician in your network, request a referral, and it's a lot of phone calls and paperwork, and it's just a big hassle. And that's just something I did not understand or did not realize when I quit my job, is that there aren't any PPO plans for individuals. So I have to live with this headache that if I want to go see a specialist or something, I have to go through my primary care physician, get a referral, and it's just a lot more hassle to get anything healthcare related done outside of the network. But it's nothing I can control. It's the way it is, but it's just something to look out for when you quit your job, is to see how healthcare works in your state for individual healthcare providers. The next thing to consider before quitting your job is to have some reserves. So if you're gonna quit your job, you probably have a profitable side hustle or some other source of income that's already generating income. The next thing to consider before you quit your job is to have some reserves in your bank account. If you're gonna be quitting your day job, you probably already have a side hustle that's profitable and it's been making money. That's why you're gonna quit. But even then, it's good to have some sort of cushion and reserve once you quit your job. The exact amount is up to you and your risk tolerance, but a good rule of thumb is 3 months of living expenses. That's rent or mortgage, food, clothing, gas, travel, entertainment. 3 full months of all that in liquid cash in your bank account is a good cushion for you to jump off and quit your job. And if you have a side hustle or another business, 3 months of operating expenses for the business is something that a lot of people don't consider. They just consider the living expenses and think that's it. But if you have a side hustle where the income isn't as consistent, like flipping or wholesaling homes, where 1 month could be zero, but 1 month all your deals can close, this is very important. My business operating costs run about $10,000 a month, while just my living cost is about half of that, around $5,000. So if I only plan for my living costs and just save $15,000 in cash before I quit, I wouldn't be able to operate my flipping business if I didn't have consistent income coming in. So what I really needed to have a safe 3-month cushion to keep my business running and to live would have been $45,000. $15,000 for 3 months of living and $30,000 for business operating expenses. That's something to consider before you quit your job, because a lot of people overlook the business side of things. So those are the 5 important things you really need to consider and plan for before you quit your job. At the end of the day, it's gonna be a big jump regardless, and probably one of the scariest things you do in your life, but you have so much potential waiting for you once you quit your job. Just mentally prepare. It's gonna be different not seeing a paycheck hit your bank account like clockwork every 2 weeks. And also the freedom you're gonna get, learn to control it. I mean, the first week, take your time and enjoy the freedom, you earned it, but it's an amazing thing to not have to wake up to an alarm clock, but you still need discipline to get up and hustle and do your thing every day. But if you're on the edge, just do it. You'll never know how far you'll be in 10 years from now if you don't make the jump today. I hope you guys enjoyed the video. For more tips on entrepreneurship, personal finance, please subscribe to the channel, and I hope to see you guys soon.